Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So if you see a hammer, and guess where I'm going to go with this. If you see a hammer and it's at or near a predicted pivot support, that's resistance. You may have a little bit better confidence to go with a more bullish trading strategy. So we've covered today the intricacies of filtering out and using pivots and understanding the fact that pivots can be used on a daily, weekly, and monthly basis. We've gone over some of the criteria used and some of the attributes of using candlesticks and some of the finer points and even a statistical relevance of looking at candle patterns, especially hammers for bottoms. Interesting to note, if you know what a shooting star is, it's the opposite of the hammer. The shooting star, the percent of times that forms the high of the day. And for you folks out there that have that book called Candles and Pivots, it's the one with my face on it, will give you the actual statistics for the high is actually on the euro currency. I'm going to look it up myself so I don't be misquoted. 41%. It's the high shooting star, the same percentage as what the low of the day is. It was quite amazing, and that as it pertains to the euro currency. Each an individual foreign currency has a unique characteristic, and the statistics on the euro were quite different than the pound and the Canadian and the Aussie. We also ran them on the Japanese yen. So today I wanted to introduce you to what pivots and how I use them and how you can apply them, in addition to introduce you to how we could utilize candlesticks to help us identify reversals, especially near these targeted pivot levels. Before I go further, I wanted to also just talk a little bit about seasonal price patterns and take you through what we talked about last time with the euro currency. The last time we got together, this is a chart actually I haven't even updated since June of 2008. This is a graph that we've done from a 10-year seasonal price pattern on the euro currency, which is kind of interesting because it doesn't include 2009's price action. It wouldn't really throw off the average annual price moves, but notice that on or about December 2nd, the euro currency generally, and of course it has its little hiccups and it bounces and it moves around, and we do see the market see these on a month-to-month basis, highs and lows, and the market rallies from about the third week of May to about the middle of June, and then we start to sell off again, and we see a little bit of rallies in July, we sell off again, and then we post annual lows right around the middle of October. Now, I don't know about you, but here in South Florida, where I'm broadcasting this presentation from, it's about June 22nd. So if you notice that we did see a bottom in the euro currency, and we did see a seasonal tendency for the market to rally from on or about the third week of May into about the middle, right down the middle of June. And then from about the middle of June, we see the market decline. So probably by next week, we'll see some type of a support low in the market and then see the market either consolidate, rally a little bit, not looking for substantial gains in the euro currency, but I would say going forward until maybe the next time we have a chance to meet, which will be right after or right before, the Forex or right near the Forex Expo in Las Vegas, or maybe come visit our website. You'll see where we'll be next. Next is London, actually, tomorrow, as Steve had mentioned. But I think it's very important to notice that if you're going to use a market and you don't understand the fundamentals, then look at what the supply and demand functions of the market is. Granted, I understand that we're in a totally different environment in 2010 than we were in 2008 or 2009 or 2004 or 2001. But folks, it's amazing that the euro currency is seeing more dramatic, or what I like to term magnified moves this year, more so than normal, but they've been within the scope of its seasonal tendencies. So how can we utilize pivots? Can you imagine using longer-term pivots, predicted support targets, and then combining that with the aspect of being on the right side of the market from a seasonal perspective? What time of the year is there buying strength in the market? What time of the year is there selling weakness going on? That's kind of important information. It's sort of like if you're trading in the grain complex. You've probably all heard of this, the harvest lows, or in the stock market, sell in May and go away. Well, believe it or not, there are different characteristics of seasonal tendencies in foreign currencies, including the pound, the Japanese yen, even the euro currency, mainly because we have different fiscal year ending periods. You have quarterly adjustments. There's all types of seasonal factors that influence the price direction. The issue is, when you use seasonal analysis, folks, is that we all have to understand that due to the fact that each year is different, you're going to be faced with different circumstances. Not every year is going to be the same. Right now, we're in an environment where we're trying to fight between a double-dip recession on a global scale to combating deflation and everyone worrying whether or not the euro currency is going to absolutely disintegrate and everyone go back to individual currency use. Well, that's a lot of ifs, and that's a lot of fear, and that's a lot of worry. And so central banks are balancing between keeping rates low, but yet trying to stave off a deflation environment. And that's going to be very tough. And it's happening here in the U.S. as well as abroad. So the euro currency has been under a lot of issues, but quite frankly, it's amazing that this year, if you go back, you'll notice that we have not just gone straight down. We have seen gyrations, and we have seen these types of trend moves in the euro currency, but overall, on or about January 2nd this year, we've seen a downtrend in the market, and I think we're going to continue to see that until we get into late September and early October time period in this window. That's when I would start to see maybe more aggressive buying opportunities in the market. So what does that mean? That means that right now I'll be looking for short-term rallies in this time period through July. Let's talk about this window that we have right now. What do you think might cause a small rally in the market from late June into mid-July? And perhaps we have a couple events that would take place. It's after the Fed meets here. Of course, the Fed is meeting tomorrow. It's also the end of the quarter. June ends the quarter. July, we also have what? An options expiration. So maybe we get a flight to quality. Maybe we get whatever type of movement that we're seeing now out of euro, and then by next week, people feel that maybe the euro's, going to stabilize. The ECB will come up with a statement.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.